Hi guys, we continue our trading academy on top-rated Forex brokers and we'll cover a subject that is full of controversy, namely a Doji candle. It is only one candle, so we'll talk about the Japanese approach to technical analysis as part of the Japanese candlestick techniques, and that candle is full of mystery. Let me spell it for you so that you know what it is. It's a Doji candle, and it's very famous in technical analysis. Now, the problem with the Doji candle is that while being a single candle, it does have a very important contribution to both reversal patterns and continuation patterns. And most of all, it shows uncertainty. Let's put that here.
Let's put here that
it's both a reversal pattern and a continuation one. Therefore, you don't really know how to trade a Doji continuation pattern unless you fully understand the concept. Now, a Doji candle looks like this. Let's build it here. So we have the body of the candle, which is almost invisible, and then you have the shadow of the candle, which typically looks like this. But it is, of course, in a different color, depending on the candle, e.g. bullishness or bearishness. So, this is a Doji candle. What does it look like? It looks like a cross. Now, the problem with it is that the Forex market changed over time. The brokers' executions today with the electronic communication network, with VCN and with the STP, straight through processing, it is very difficult for a daily or weekly candle to form a Doji candle like when it was formed many years ago. Why? Because now we have a quotation on any currency pair. Take a look here at the euro-US dollar that has a value of 117.33 1 or 2, so 5 digits that follow after the 1. Therefore, that means it is very difficult at the start of a trading day to have a quotation like it is here, 1.17347, and then right at the end, which is 24 hours later, to again have 117.347. It is unlikely. Therefore, in today's world, you've got to give the Doji a bit of room. Let me show you what this means. This is the weekly chart on the euro-US dollar. Let's zoom in. And this higher trend here started in the summer, and the euro-US dollar went from 103 something in spring actually, all the way up to 124 for a full 2,000 pips on its trade move up. Remember that the Doji shows continuation or reversal patterns. So during these trips, how many candles do we have here? Let's count these candles. So from here at the bottom and all the way to here, we have 35 weeks. So during those 35 weeks, the euro-US dollar moved to the upside. What candle here shows or resembles a Doji one? Let's start from here. This isn't a Doji here because the body is too big.
The body here is quite big.
Let's try to find out where the OHLC one is.
The OHLC one moment.
1 minute. There we are, so that we can see the values. So, on this candle here, we have what? Let's look at the opening price, 10523, and the close is 10529 for 6 pips, which is not enough for a Doji. So which of these look like a Doji candle? But if we go to this one here, this is a very nice Doji. Now let's look at the opening price, 1.12015. And let's look at the closing price, 1.12039. So we're talking about 2.5 pips. And then we check the time frame, which is the weekly time frame. So in the matter of a week or 5 trading days, we had 2-point-something pips difference on the euro-US dollar pair. This qualifies it for a Doji. But remember what a doji means or looks like. Let's zoom out. There is uncertainty, which may mean consolidation, a continuation pattern, or a reversal pattern. In the case of this doji here, we don't know which type of pattern it is. Why? Because it forms in the middle of this consolidation pattern, and it can be both a reversal or a continuation one. So what should we do as Forex traders? It is very simple. We take a horizontal line and we mark the top of this doji candle like this. And for the very next week, it can be a reversal, right? We can only go long and buy if the price comes and breaks those highs, which is a good enough opportunity for us to go long, because the doji showed a continuation pattern. Until then, there was nothing. But at this very moment, price-wise, this candle, this green doji, the market opened here, then moved low for the whole week, only to reverse and form what? A second doji candle. So two doji candles, or two weekly candles that show hesitation, formed on the Euro-US dollar weekly chart. But this is a so-called dragonfly doji. This is a bullish candle. This one here is a dragonfly doji. So we had one normal doji that shows consolidation, that shows hesitation and shows uncertainty for the future price, and traders do not know if this is bullish or bearish. Then the next week forms a dragonfly doji, which we know is bullish.
Then the next week forms a dragonfly doji, which we know it's bullish. And
even here, after the dragonfly, it is dangerous to go long. All we need to do is wait for the highs and to place a pending buy stop order, 1294, and when the market comes, the 1294, simply we go long. And here we see the trend resumed and move high. This is how to trade the doji. Try to avoid using the daily chart, because there are many brokers who offer GMT prices, and when they do offer GMT prices for the Sunday candle, you will only have 2 hours where the price doesn't evolve much, and therefore you will have the impression on the daily chart you will see only doji candles all over the place. So look on the 4-hour chart or a weekly or monthly chart. It will take a bit of interpretation between the bid and the ask price, but the power of a doji candle here, this example here sums it up really well. So let's move on now with how to trade a trend. Everyone knows that a trend is your friend, and we'll see exactly how to interpret a trend. Bye for now.